Grains headed mixed with livestock to the plus side on Wednesday. Oliver Sloup with Blue Line Futures is joining us. And Oliver, we had a pretty good sell-off in the grains early on Wednesday, but kind of came back off of the lows. So is the technical selling done?
Well, I think for now, I think today's reversal was constructive, but I think the bulls really have their work cut out specifically for that soybean market. That is where a lot of the technical damage has been done. And heck, looking at that new crop November contract, we could rally back to 12.20 and still be in a downtrend. So there's a lot of damage to repair on the chart. But the fundamentals are really going to take control here with regards to weather, and that goes for soybeans and corn. Corn chart looks quite a bit more constructive. We had a sell-off to start the week on Monday's trade, a sell-off on Tuesday. But really, that sell-off just took us to the 50% retracement, or back to the middle of last week's rally, which was just about 49 cents. So the fact that we were able to defend the 50% retracement and rally back towards the high end of the day's range, I think is encouraging. But the hurdle the bulls really want to get out above to start a fresh month of trade, $6 to $6.06. This isn't just psychologically significant, but technically significant as well, with the 50-day moving average coming in right at that 606 mark. So if we're able to get out above there, potentially we spur a little bit more short covering as we start a new month.
Was it weather, macroeconomics, or both?
I think it was both. For soybeans, I think a lot of it was probably more on the macro side. We got some pretty bearish news out of China. Their PMI numbers came in really soft, 48.8. That's a 5-month low for that. 50 is the reading. It's the line in the sand for either expansion or contraction. And China's been the story where we've been looking for them to recover and really blossom, but that really hasn't, played out well. And I think that's been weighing heavy on a lot of markets. Soybeans, one of them. You can see the pressure in the crude oil complex as well.
Absolutely. Yet cattle were able to shake that off and close into new contract highs again. How much farther can we go in that market?
Well, it's like Groundhog Day in the cattle complex. New highs seems to be the headline that we're getting every single day. And I mean, look at it. We just rounded out a new month of trade. That's 8 consecutive months of gains for the live cattle market, which is just phenomenal. Going back to 2014, obviously that's where the comparison comes in. How much more upside is left? A lot of that can be very dependent on the fundamentals, which still remain strong. I think what has me a little bit nervous is the fund length right now. The most recent commitment to traders report show they're net long about 102,000 contracts. So if at any point those fundamentals do soften up, there could potentially be a rush for the exits.
All right. Thanks so much. That is Oliver Sloup, Blue Line Futures. We'll have more Ag Day coming up.